Hey guys, welcome to this week's video. We're doing a deep dive into Profit First, a system that can make your business a profitable one. So, if you want to make a profit, I suggest you stick around and watch our video today.
So, welcome back to our deep dive into Profit First. If you're a business that is struggling to make a profit, or you just can't get by a week without having financial stress, this video is for you. So, what is this Profit First? Well, Profit First is a book that I actually came about a year ago, and it just really resonated with me, and I just got it. As an accountant, I was like, this is fantastic. It makes sense. It was a system that I guess leveraged off what we do every day. And you'll get to see this as we go on with today's video. I know as a business owner, when I look at how much money I make, I actually tend to look at my bank account. And this leverages off looking at your bank account to see how good you're going. It's a system to help you actually help manage your cash flow, help you make a profit, and it doesn't need you to complete an accounting degree to understand how it all works and how you can create your business and actually make money from it. So delving into it. So what is the accounting equation? So traditionally speaking, the accounting equation is sales less expenses equals profit. Now, they also refer to this as, there's two standards. There's GAAP, which is the generally accepted accounting principles, and the Australian accounting standards as well, but we'll just focus on the GAAP. So GAAP, and even the Australian standards basically say that for a business to make a profit, how they determine the profit is the formula sales less expenses. And it's, you'd have to agree, it's pretty simple, it's pretty logical, and it makes sense. But unfortunately, it doesn't bring into place human behavior or human interaction about how they understand that. And the worst part about all this is that, what we're doing is we're putting expenses, I guess, first. Okay, sales are always going to be first, but, we're thinking after sales, well, less expenses. Why don't we go, hey, sales, now what profit do we want? And then we worry about the expenses. So this is where, I guess, Profit First comes in. We're actually going to start focusing on the profit first and start thinking about human behavior around numbers. And that is going to lead you to a profit. I want to quickly just go over to a lesson on toothpaste tubes. And I reckon that you probably wouldn't have thought we'd be talking about toothpaste in this video, but here we are. I guess, look, in the book, Mike McCallovitz talks about Parkinson's law, right? And he had a theory about the demand and resources and how, I guess, the supply of that comes together. What have I got to say about this slide? Well, it's pretty simple. Think about when you get your toothpaste. When you first open up a brand new freshie of toothpaste, you're pretty free with it and you let it sort of go through. You might give yourself maybe an extra 10 or 20% more than you really need to. But it's amazing that when you get to the end of that toothpaste tube, that you'll only give yourself what you need and what you can get out. Or you're probably a little bit, as you probably get halfway through that toothpaste tube, you probably only give yourself what you need. So think about that. Think about the toothpaste, and then also then apply it to what you do in your business. If you only had $1,000 to meet your expenses, well, you're not going to pay for expenses you don't need. But whereas if you had $10,000 of cash in the bank, well, you're probably going to be a little bit more free about what you can spend money on. So I want you to think about toothpaste, time, and money, and just leave that in the back of your mind whilst we're watching the next few slides. So let's talk about behavior. If we were given 2 weeks to do a project, right, I guess you would, you would get it done in 2 weeks and be quite efficient about it. But let's say, for example, the project only took 2 weeks, but you got given 8 weeks to do it. Well, you're going to take your time, do it, and then what's going to happen is you're going to procrastinate. Oh, look, there are some people who, I guess if you go back to your uni days or your TAFE days or even just high school, when you got an assignment and you were given like 8 weeks or maybe even more to complete it, a lot of people that I discovered would do it, would basically procrastinate the whole time and would get it all done in the last week or days. So even you have a look there on the right, Parkinson's law for procrastinators, you can see there the time allowed and the effort. You see all the efforts in that last part of the time, so to the right of the table. But if we look at Parkinson's law here, if we were only given 2 weeks to do the project, and it only took 2 weeks to do, well, a lot of effort's going to be in that starting period. So behavior is really big consideration when we look at profit first. So I guess what profit first really is about is it's, looking at your bank balance. And I know it's a business owner, and I've done it. We look at our bank balance first before we go and look at, and what we should look at, our profit and loss, cash flow reports, balance sheets, and all those reports you see in our accounting systems. But what we do is, by humans, is it's easy. We just go straight to the bank account. If you go back to Parkinson's law, it actually dictates that as our deposits increase, so does our spending, and vice versa. And hence, this is why most businesses have extremely volatile financial trends and really rarely a profit. But if you were to apply profit first, we would take your profit first and then use your natural behavior to actually use it as an asset to actually help you derive profit. So we're actually going to use your human behavior and leverage off that to help you create a profit. So I guess what we're doing there is we're not going to change our habits. We're going to leverage them. So what we're doing here is profit first encourages you as the entrepreneur to continue your bank balance reporting. And that's what you do, your bank balance accounting. And the way we're going to do that is we first start allocating money between, I guess, a few different accounts. Okay, so you imagine just allocating first on a regular basis profit to another bank account. And so what's going to happen is, as the entrepreneur, you're going to actually start seeing a portion of deposits available and expenses put aside as well for your different items. So what we're doing is we're leveraging off your bank balance reporting by basically actually spreading out the money in the one account into 5 different accounts. So I guess the third thing that you need to know is the profit first principle does not try to change your habits, which is actually impossible to pretty much do. Profit first works with your existing habits. First, by allocating money to different accounts and then removing the temptation to borrow from yourself, your business will then become financially strong and you will benefit from a regular profit distributions. So with profit first, you need to flip the formula sales less profit equals expenses. Logically, the maths is the same, but from a standpoint of an entrepreneur's behavior, it's radically different. With profit first, you take a predetermined percentage of profit from every sale first. Only the remainder is available for expenses. So let's think about it this way. With profit first, you get to flip the formula sales less profit equals expenses. Logically, it's all the same, right? But with that predetermined percentage, you now only have what you need to get by. So if we look at the buffet, for example, and it comes back to like that toothpaste theory as well. When you go to the buffet here, if you've got you got all this to choose from, and this is what I think about. This is like your bank account. You got all this money to choose from, but then if you only got a small plate, it means you can only add a little bit for what you need, right? And then it's basically sort of going, well, we've got all these small plates, and what we're going to do is we're only allocating what we can and what we can use here on this plate. So think about it this way. we've got one serving tray and we've got 4 portions. The serving tray is like your income account, okay? And then we set up 4 other accounts. The first one is for your profit. The second one is for tax. Third one is actually paying yourself. And the fourth one is expenses. So what you actually physically going to do is if you want to do profit first, you're still going to keep this main income bank account, but then you're going to go set up 4 different bank accounts. So think about it this way. If we go back to the food, it's basically saying, well, all the food that we're allocated to, what we can actually take from the buffet, we're putting it into 4 different plates, and we're going to spread it over time and using it for different things or different parts of your business. Let's talk about, let's say, for example, with the profit first. So what we're doing is we're bringing your cash in on a fortnightly basis, and then we're going to do this thing called determining your allocated percentages. So what we've got here is we're going to determine of the revenue that comes in, how much of it goes to your different bank accounts or your different plates. So once again, we call this TAPS, or which is short for target allocated percentages. And if you go onto our website, or if you get in touch with us, we can give you a free document like this here to actually work out what your target allocation percentages should be. But my guide would be that based on your business, if you weren't getting any assistance from a profit first professional, that you would look at these percentages to start with. And you can allocate, basically, if your business was, say, had a turnover of $250,000 to $500,000, that of your real revenue that comes in, and this is real revenue, is basically the revenue that your bank account, or what you're from your sales, what comes in your bank. And so what we do is every fortnight we would basically say, well, yep, 10% of it goes to profit, so it goes to a profit account, and then 35% goes to owner's pay, 15% left for tax, and 40% for expenses. And what would actually happen from there is, well, with those expenses, you've only got 40% just for expenses. Okay, so you can't spend more than that, because if you spend more than that, it's then taking away, I guess, what you're going to pay for yourself, or it could be taking away the money you've put aside for your tax, which could be like the GST. So keeping within these percentages means that you are allocating money where it's supposed to go, and then there's no surprises or amounts that have not been allocated or paid. So it won't leave you in a position where you get to the end of the quarter and you can't pay your BAS. But if you were to stick to profit first and you got that money there, when it comes to BAS time, you're not going to be worried about it, because you're going to have the money there to spend. So here, this is probably a demonstration on what it looks like with those bank accounts. So obviously the profit's a small plate, and then bigger plates for owner's pay. And yeah. Removing temptation. Well, this is a good little slide here. And the reason it's really good is because with those bank accounts that you might want to steal from, if you're sort of person where you're going to take money from, say, for example, we go back a slide from the tax account or the profit account, what we want to do is want to remove that temptation by actually you going and setting up a new bank account that is not easy to access, and when you transfer the money, it's actually going to take maybe a day or 2 to get to you. So those accounts where you cannot spend that money, like for example the tax account and the profit account, we put that in a different bank altogether. By doing the allocation process and paying the bills twice a month, and so what I recommend is that you allocate your money between your targeted allocation accounts, your TAPs. You do that it says on the 10th and the 25th. I mean, that's probably what the book says, 10th and the 25th of each month. I actually just recommend that you just do it, every second Friday. So every fortnight on the same day. And that's probably when you do your staff pays or even paying yourself, and when you pay all your bills out. I guess the first thing to know is when you're doing this process every 2 weeks, it means you're doing it in a batch, which means you are more efficient. So instead of paying bills here and there, you do it all together at the same time. So every fortnight, a new system that I recommend implementing is that every 2 weeks, I mean, you you're basically paying all your bills, looking at what you need to pay out, and managing your accounts and giving a bit of a tidy up. It doesn't mean that you spend, you don't reconcile your account for 2 weeks. I mean, you should always reconcile your zero file, at least 2 or 3 times a week. But it means that, I guess, the big amount of work you need to do as far as paying bills and touching up the accounts where you need to should be done every 2 weeks. The second thing I like about this is then it also gives you clarity on your cash flow trends by doing this. So you're spending time actually looking at your accounts, and it'll help, indicate changes where things need to change. So very quickly, Profit First is transferable into your personal life. And this can be done by actually just applying the same rules that we would have for a business client. Quite simply, we'd probably set up 5 different accounts. The first account obviously is the income account. So just like in Profit First, we have our revenue account for our real income that comes in. So that account there would be, I guess, what comes in that account. So that would be any money that is your income, so wages and stuff like that. The second account is that you'd probably want to set up personally in a Profit First sense, would be like a financial freedom account. So this money could be used for emergencies or I guess that unknown. So just like that profit account, keep money aside to spend for, reward yourself once a quarter for the savings you've made. The next account you probably want to set up is an account like an owner's pay account, and that could be for, I guess, what we could probably call like a fun account. So, and that money there could be maybe putting money aside for holidays or something like that. So maybe a percentage of that. The next account would be like your operating expenses account for big purchases. So that could be, think about like your daily or your weekly expenses that you have. That could be, shopping expenses. It could be for paying off the house mortgage. It could be paying rates and water and electricity. You could pretty much go on and on about what accounts you have, but I think what you really want to do is you want to think about what accounts, 5 foundation accounts that would work for you in your personal life, where you want to keep money aside. So it's really, I guess, to start with having a look at what expenses you do have, what is you're trying to save for, what are your goals you're trying to achieve, and then setting up a budget to put those money aside into the 4 other different accounts. Just as like Profit First, we'd sort of look at allocating that income into those other accounts. You would do it either on the 10th and 25th of each month, or like I like to do every fortnight. So that's a bit more in-depth about Profit First. If you've got any questions, I suggest you get in touch with us at NGR Accounting. If you like this video, could you please share it with your friends and family? But like I said, any questions, please come to us and let's have a chat. Thanks, and thanks for watching.